Okay, so here we're going to look at the Avco method, the average costing method for inventory valuation. Okay, and remember to get the average cost to value the inventory. This is the average cost to value the inventory. It's just the total cost divided by the quantity. Okay, total cost divided by quantity. So we've been given information in this question here. All right, let me just put this side by side. Yes. So we have to put this information in our stores ledger. Okay. So the first thing, opening inventory, you go in the balance section. Okay. Opening inventory, 50 units, valued at 20 kwacha. Total value is 1,000 kwacha. Okay. So here, there is no need to calculate any average cost. The average cost to start is always going to be calculated whenever a purchase happens. Remember that whenever a purchase happens, the average cost is going to be calculated. Okay, so your opening inventory, you just leave it like this. Okay. Okay, now we look at the transactions. On the first, we purchased 20 units at valued at 20 kwacha each. You're going to put here on the first, purchased 20 units valued at 20 kwacha each. So the total we paid for this, as I said here, let's say you're selling spare parts. Okay, spare parts, right? So here, since we've now got a purchase, this is where now we're going to have to calculate the average cost. Okay, first, remember we have 50 units valued at 20 kwacha each. 1,000. Okay. Then we've brought in now another 20 units valued at 20 kwacha each. $400 kwacha. All right. Yes. Now, as we said, the average cost to value the inventory is the total cost, okay, or the total value here. Okay. This total cost here, which I'm meaning is the total value here. Okay. And the total cost of this inventory is 1,000 plus 400, 1,400. The total quantity, we have a total of 70 spare parts. Okay. So the average cost of these spare parts, we're just going to say the total cost or the total value, 1,400 divided by the total quantity, 70 units. Okay. So the average cost of this inventory is 20 kwacha. Okay. This is what we value the inventory when we make a sale. Okay, this 20 kwacha, this average cost here. Okay, so it doesn't really change because both of these were valued at 20 kwacha. So as you can see, the average cost is still 20 kwacha. Right? Yes. We have another transaction. On the second, we purchased 30 units valued at 18 kwacha. Okay, we bought 30 units valued at 18 kwacha. Total cost of these spare parts, 540 kwacha. So in our balance section, you're going to put 70 units here, valued at 20 kwacha each. That's the average cost. Okay. Then you're now going to bring in 30 units, valued at 18 kwacha each. Total value of these units, 540 kwacha. So now we calculate the average cost. Okay. Our total cost of this inventory, 1,400 plus 540 1940. The total number of spare parts we have in the shop, 100 spare parts, 70 plus 30. I don't know why my Excel is lagging, but just hold on. 70 plus 30. So the average cost of this inventory, 1,940 divided by 100 kwacha, 19 kwacha, 40 ngwe. That is the average cost. So this is how much we're going to value the inventory at. Okay, that's how much we're going to value the inventory at. Okay. We have another transaction on the 3rd. We issued 20 units. So here, unlike FIFO and LIFO, where you have to go to see which batch came in first or last, here you're just going to say 20 units that were sold. The 20 spare parts that were sold, we're valuing them at the average cost, 19 kwacha 40 ngwe. So the cost of these 20 spare parts that we sold is 388 kwacha. Okay, 388 kwacha. Okay, in our balance section, okay, we had 100 units. Now we sold 20 of them. So it means we remained with 80 spare parts valued at 19 kwacha 40 ngwe each. Okay. 80 times 19 kwacha 4 ngwe. So that's our balance of spare parts that's remaining. The total cost is 1,552. Okay. On the 4th again, there's another issue. We've sold another 15 spare parts. Okay, we are still going to value them at this 19 kwacha 40 ngwe. Okay, so the cost of these 15 spare parts that we've sold is 291 kwacha. Okay, yes. So on our balance section, we had 80 spare parts, we sold 15. Now we've remained with 65 spare parts valued at 19 kwacha 40 ngwe. Okay, and the value is 1,261 kwacha. Okay. All right. So we go to the next transaction on the 5th. On the 5th, purchased 10 units valued at 10 spare parts valued at 15 kwacha each. Okay, so for these 10 spare parts, we paid a total of 150 kwacha. So every time there's a purchase, this is where the average, this is where you need to tabulate the new average cost. So remember, initially we had 65 units valued at 19 kwacha 40 ngwe. Now we've brought in 10 units valued at 15 kwacha. Yes, 10 units valued at 15 kwacha. Total value of these goods 150 kwacha. So now we want to find out what is the cost of this remaining inventory. I mean, what's the average cost? So this is what we're going to do. Okay. So the total value 1,261 plus 150 kwacha. The total cost of these goods 1,411. Okay. Then the total quantity 65 plus 10. We have 75 units, 75 spare parts. Okay. So the average cost of these spare parts, the total value, which is the total cost of these goods, 1,411 divided by 75. 1,411 divided by 75. The average cost 18 kwacha, 81 ngwe. Okay. Then our final transaction on the 6th issued 35 units. All right. So here 35 units. Okay. We're removing them from these 75 units. Okay. So we're valuing them at 18 kwacha, 81 ngwe. Okay. 658 kwacha, 35 ngwe. So we are going to remain with we're going to remain with 40 spare parts valued at 18 kwacha, 81 ngwe. So the value of our closing inventory is going to be this 40, 40, 752 kwacha. This is the closing inventory. Okay, that's the value of the closing inventory. All right. Yes. Then if we need to calculate the gross profit, the same way as we did with the other methods, we tabulate the cost of goods sold. Okay. Cost of goods sold, COGS here. Just come here under this column here, the sales or issues column, under value here. Okay, this value here, think of it as also a cost. This is a cost. Okay. So we get the total cost of the goods sold, 388 plus 291 plus 658. The total cost of the goods sold, 1,337.4. Okay, that's the cost of goods sold here. All right. Then the sales revenue. Okay, we find out how many goods did we sell in total. We sold a total of 20 plus 15 plus 35. We sold a total of 70 goods. Okay, these 70 goods are valued at 40 kwacha each. In the question, it tells us the selling price of the goods or the spare parts is 70 kwacha. I mean, it's 40 kwacha. So we sold 70 spare parts valued at 40 kwacha each. So our sales revenue is 2,800. Okay, 2,800. So our gross profit, sales revenue minus cost of goods sold, we get 1,462.7. This is the value of closing inventory.